Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for, and here we go now, on Thursday, the 12th of August, 2021, about 5:55 p.m. Central Time. Interesting day. The PPI number started the day off, and that number came in hot. In other words, a bigger number than the market was looking for. I don't know if that turned off the $27 billion in the 30-year auction or not, but that auction today, as stellar as the 10-year note auction was yesterday, this is how poor, the exact other end of it. So one side of the line, the other. If that's an excellent, this is a failure. That's basically how I looked at how this one did. Why? I'm just questioning, are people studying how much this COVID is spreading and how fast and how violent it spreads? Are they reading what's going on in the hospitals across the United States? Are people studying that even San Francisco today, that liberal place, right? If you've been there, you understand. What is it? Well, they said if you want to go to a restaurant or a bar, you have to have your vaccine and prove it with a card. Illinois, I woke up this morning, we now have a vaccine website where you print out and on your phone you get an app and you can walk in anywhere and show that you've got your vaccine. I had warned you that this was coming because people that don't get vaccinated are carriers, and away you go. I don't believe the propaganda today Chicago put out. Chicago said that we had the Lollapalooza event, and what we have about 450,000 people came in over 3 days, and there's been 200 reported cases. Sure. And they said it's not a super spreader event. Okay, I pray they're right. I pray Sturgis is, when that event ends this week, is correct, that that doesn't turn it out to be. But the odds don't favor that when you get that many people together. Okay, so let's get away from that and talk the markets, because the power has been in this market, the S&P 500, and keep in the back of your mind, as this market has stayed over the 18-week moving average, it hasn't allowed any short signals to materialize into anything if you're using daily charts. On a weekly chart, you could have never had a short sell signal other than when you got under the market a year ago, October, the past October. And that was for a brief week or so, and then you came right up and that was it. So interesting as to what's going on there. When you look at this chart, the first thing is you're not as volatile as you were back here. I was watching today Bloomberg talking about that on the news, that the volatility has been coming out of the markets. I also said to you yesterday, you don't sell a quiet market. You know I said that, and boom, away you go. And that's because you were getting quiet right through here, right there. And I think a lot of traders did come out of the market right in this zone for the jobs data. And then I think they had a chance to get back in right through here after the pullback, and the market has been working higher since then. If you get my research and you're a paid subscriber, you know what I'm telling you, the exact truth there, and you know how your position has done. In the S&P 500, and by the way, I don't always win, okay? I lose plenty, but you control risk, and this has been one of these runaways. When you have an embedded reading, you play it if you can get in. Higher lows, higher highs, bullish. Let's go to the next, moving averages. This was the only shot you had back here to come in, and right afterwards, that was the setback. Each day since then, you have done what? Made a higher high. What else? Now you're narrowing in where I'm telling traders that I think the big boys are now taking some money, serious money, off the table. The odds of getting and staying over 465.27 on the first attack of a Bollinger Band is going to be difficult. It is all of 11 points away. It's not far, but I do think you're seeing the pros taking some money off. Are they bearish? Let me repeat. No. Why? Until this red line's under 80, what they'll be looking to do is on each dip back down, not under 80, But in each dip in price, I think they're going to start buying again. I think they'll buy until the momentum on this leg ends. Now, we had the same type of leg here. We had the same type of leg here. So if you think the market doesn't give you opportunities and it doesn't give you corrections, well, you don't have to believe me, but you can't deny the chart action. And when you get up like that and you're stretched, the market has a tendency to back off a bit. That's my point. Am I telling you I'm bearish? No. Anybody that writes on that, that's not what I'm saying. I'm saying you're priming the market for an eventual pullback, and the idea of trading into that now makes a lot of sense, but never being short at this point. In the NASDAQ, I will stick with what I said. You lost the embedded reading and the market lost its way. Does this chart just keeps going higher? Look anything like that chart, and since you lost that embedded reading right over here, that's exactly what occurred with the market, a 79 reading, and then you went to the 18-day average, and that's what you're playing around. The other market that's been doing good is the Dow, but here you are on the upper Bollinger Band, so I'll be the bad guy in the crowd that if you're long, I think pros are taking a substantial amount of position off at that number. Are they going short? No. Because you're embedded, do I think they want to buy a break? Yes. Today's high in the market tonight is 35,431. Let me come over here and, oh, I went to the wrong chart. I want to come back to that one right here. Okay. Let's go to the highs today on this day. 35,438 is the high of Thursday. Friday so far is 35,431. If the market just breaks here, I think the pros are going to buy it. There's a moving average that I teach in my charting course, and I show every morning in my paid subscribers where I think they will latch on to it, and I know that I'd be looking at that very hard. So I am not bearish. How high? High's a relative concept. I don't know. The Russell, as I said, is just now caught, and I said this to you right here, between the upper Bollinger Band and the 100-day average. It is not trending. The bias is up, but it's overbought. Then the 30-year bond. The market with this action's got a higher high, lower low. You've literally gone from an upper Bollinger Band to a lower one. You ran out of steam here, and for the moment at least, you have run out of downside steam. You may want to argue that, but I'll look at the market oversold, and right now, that's what it's done since it hit it. Same thing is true in the 10-year notes. Upper band, lower band. Didn't even stop at the 18-day average here or here. When you see that, it's a sign that you got one of these vertical price moves that takes place, and a lot of money just dumped. You know why. People are wondering the COVID, inflation, the tapering. You know the stories. I'm not going to repeat them. In the dollar index, will you make it to the upper Bollinger Band before you back off? That's really the question I see it. You're overbought. Ideally, you hit that and let the pros out there. There's also a window envelope number right by that, so I know they're taking something there. Then we get to the eurocurrency, and I'm going to repeat again. Upper band, lower band, vertical price move. You often get those, and you know you're in one when the market doesn't even pause. It just goes slicing through. And in this case, it did it in 72 hours. It went from the upper band to the lower. You're in a downtrend. You're oversold. I've taught you this. I do not think that attracts new short selling money. In the British pound, lower highs, lower lows, battleground, very clear. Let's take this off. Look at what's going on. You go to the 18-day average on Tuesday, Wednesday, Thursday. You're trying to break down. If you can, the trend is down, then you look for lower numbers. I'll tell you something else. You have an outside day up. You take out the low of an outside day up. I look for the market to then make a run for the closest moving average and or the Bollinger Band, the closest of it. Well, it's this case. I don't know if that'll work or not. The stop has to be over the day's high of the outside day. It's one of the tools that I look at. Bitcoin, I will stick with what I teach. The first challenge of a 100-day average in an upper Bollinger Band is often a resistance point. That's what you've got. Plus, you're starting. This is only 6 o'clock at night to lose an embedded reading. Close under 79 and that, the odds would then favor you're going to make a run back to the 18-day average. The easy money was taken off the market up here by the pros. Now it gets very difficult in this market. In the crude oil market, momentum is flat, lower highs, lower lows, and there's a huge battle. OPEC has its point of view. IEA has got a different. One is saying that they're going to see a reduction in demand because of COVID. The other is saying they're not seeing that. So away you go. It's all in my newsletter, so I'm not going to explain that all to you here. WTI crude, same thing, resistance. Trends are down, big support, first challenge, 100-day average, lower Bollinger Band, first support. I mean, some things are right in front of you. By the way, there is nothing in charting that works 100% of the time, but there are many things in charting that work more times than not by quite a bit. I believe in these formations. I believe major moving averages have a big following, and I watch them. And then when I couple that with a Bollinger Band and you get the following of that, I believe that you get a confluence of ideas, and that's what you're always looking for as a trader. You're not trying to outthink the next guy, and I don't believe you're trying not to be with the herd. The herd I want to be with are the smart money. That's where I want to be. I don't want to be with the Johnny-come-latelys that are trying to buy the market here to get long. And they'll tell me, nah, I've worked out a system that works. Well, I can show you. Why not go short then up here? And it just keeps going on you. That's not what it's about. Sorry, this natural gas, the chart went cockeyed on me. I've got to change everything, and I'm in the process of that for the weekly charts now, so be ready for those. So my charting course teaches this. Now let me tell you how I teach before you disappear. The first thing on any chart is, what is the trend? Is the market trending or isn't it trending? What defines the trend? I teach you that, and I teach you how to take your chart and by hand on the chart, using your computer screen, draw the lines so you understand them. After you understand them, I never want you to draw them. The indicators that I created in our charting software will do it for you. Got it? It's pretty simple. But what do you do next? You want to filter what the trend is with moving averages. You want to make sure that the bias of the market is with the trend. If it isn't, you pass. It's one of the things. Okay, where might the market go in terms of momentum? Is it already overbought? Is it oversold? Is it just bouncing back and forth? Is it embedded? Embedded means you've locked it in one way or the other. I'm going to teach you how to do that and recognize what it is. The next step that you're going to get is, how do I come out of that market? Am I getting stopped out, or is there certain numbers that get hit? Well, I'm a big fan of Bollinger Bands. I teach it here all the time. And yes, if you follow them, I believe they're one of the best tools out there if you understand how to work with them. Most people don't get it. So I'll teach you the basics of it. Not my enhanced part of it, but the basics. Then I'll keep adding to the course as I learn more myself and I teach what I learn. Next, what if you don't hit a Bollinger Band? Are there other ways as the market's making a move that are important resistance and support zones? They're called deviations from a mean, the moving average being the mean, and they're called a window envelope. I teach you how to apply them on the chart. I'll give you those numbers every day, and I run them 2-3 times a day, so you always have access to the updated ones. How do you learn? Okay, each main chapter of what we just went through starts off with a PowerPoint chapter, so you learn the concept. I don't want you to do anything there. Then the charting software that comes with this has the data in it that I'm using in the older videos, because I'm recording those videos. That's how you learn. You take a chapter at a time. How does it get reinforced? Well, how I reinforce it is, when you take the course, if you're not getting my research already, I'm going to give you a trial. And the trial is going to allow you to look at either in the videos in the morning, my subscriber video for ETFs and or the the futures. You're not going to get both for free. It's one that's going to come in there. If you're already a paid subscriber to the morning, I'll give you the ETF. If you have it for both, you've got it already. Stay with it. Then you're going to get twice a day minimum my written updates that start Sunday night, finish on Friday. That's one Sunday night, at least one Friday morning. They come out 11:30 in the morning approximately, 8 o'clock at night by the latest typically on a Sunday or any other night during the week, and special updates. As I see a special thing happening in the market, I will put out special updates. Do this, do that. You don't have to follow anything I do. I'm not out to manage your money. I'm out for you to see what I'm doing in the marketplace for you. Does that make sense? And it reinforces what you're learning. So this is not where, hey, you take a course and then we disappear from you. Not at all. I get some people that are subscribers, they'll write me and they go, you know, I've learned enough. I can do this on my own. Bingo. I will tell you what's going to happen. When they break away from it, they'll come back in several months and say, I want that discipline, because you will break the discipline unless you've done this for years. You're going to say, no, I got a big lead. I'm going to wait and see. The market waits for you to do that. It waits for me to do it. I did it this year in corn and blew a big trade. Or I took some money off on the first half of the trade, but again, now I'm still remembering it. Most people don't. And I shouldn't have done that. So when this jobs data report came, I wasn't willing to go through it one way or the other. Was I bullish the market? Absolutely. Did it break? It did. And then it let me, thank God, some of the traders were able to get in again. Okay. Doesn't mean it always goes that way. Go to the website under education. That's where the course is. Research is the word next to it. You'll see that over there. Decide if you like it. $249. It's an awful lot. The charting software is worth $100 a month. My research gets $60 a month if you don't have a trading account with us. So for the other $60, you're getting 8 hours of videos. It's a pretty good deal. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.